Hello, today is the 21st of August 2012, and this is today's gold and silver technical analysis video. So let's get started. And today's a breakout day for gold as it has managed to reach this previous high, but even more importantly, breaking out past this 1623 level that was resistance on 5 different occasions. And well, now the area of 1623 that formerly was resistance and formerly before was support is once again that of support. Ideally, what you want to see was a move at least to this level, which is where it's at, finding support back at this level, and then eventually making it up towards this previous high to that of 1685. And then what? And when I say then what, I'm stating wait for the next setup after all. Some people have stated before that what good is technical analysis and manipulated markets? And well, I'm sure there's a couple people that may have figured out that this thing was going to break out today, but I don't know. Maybe if you know somebody, let me know. And I'm kind of being sarcastic within the whole issue as it was pretty an obvious situation with the constant pattern of the higher low situation in silver's breakout yesterday that this was going to occur. That's short term. Let's take a look at long term, and we'll take a look at weekly chart for the gold. And I stated a while back I'm going to do a video gold for 5,000 an ounce coming soon, part 2. I did this in 2009 when gold was before 1,000. But I want to wait for the area to buy on weakness or strength. And I figured the area to buy on weakness is a test of the high 1400s, low 1300s. I'm not even going to be considering this a probable situation until we can at least get a breakdown below this key support level, which has not occurred yet. But as far as buying this on strength, I need a clear breakout above this line in here. Twice hit resistance in at 1758. It just can't break it. It's got to have a clear breakout above. So that's the story for gold. And as far as the moving average is concerned, the 18 average is now above it. It's starting to go higher. So I said this with silver, and this is the same with all the markets. When you're in a downtrend, you want to have a clear break above it, or at least have a break, come back, find support within the bands, and then break out the high that you established. So let's assume this rally continues further up to that 1685 mark, we'll say, comes back down to this band, and then breaks 1685, and that would say that this is now in a bull market, because this, of course, has been in a downtrend and neutral right now. Silver is next. Let's take a look at this on the daily chart as there's further gains from yesterday's movements. And the yesterday's resistance, like I stated, was taken out, which was in at 28.42, and some further gains. So this is day 2 of the intermediate term bull market, as we've been in a downtrend for, well, since the 28th of February of this year, so pretty much a half of a year. Had that failed attempt in here, another failed attempt here, another failed attempt, and this one, as of now, it doesn't look like it's going to fail. We should easily, or at least have a high probability odds of having a test of 30 without the 18 average going in a downtrend. That's what should take place. How long it's going to take, I figured we'll have a quick move up to the high 28s, low 29s today. And maybe we'll have a fast move up to 30 later this week or even today, tomorrow. I doubt that for today or tomorrow, although possible. I think what would be more ideal or more realistic or more probable is that this thing settles down a little bit, maybe pulls back and makes another higher low. The last previous break low was 27.5. Ideally, you want the next low to be about 28.40, because that's where the previous resistance occurred. Again, this is all short-term analysis. So let's take a look at this on the weekly time frame as well. And I've said the same thing before about this, that for me buying anyway, I haven't bought in quite some time, and I'm not planning on it for a while as well. As I'm waiting for the clear breakdown below this, down below 22, 21, 20, 19 type area. Obviously, it's the same thing as gold. It's got to break key support, and that hasn't occurred yet. Or I'm waiting for a confirmation break above this significant Fibonacci level. The Fibonacci level is from the 49.81 high and the lows of 26, which occurred just here. And therefore, a confirmation break above here is when I think this thing is really, really going to get going. Now, if you know there's a high probability chance that it's going to break out without going to 20, I got to say, why would you wait when it's at 29.29 now and you're looking to get a confirmation break at approximately 41.42? I think it's better now. But again, it could very easily still not hold, because as I've stated, we get down to 30, well then what? What are you going to do? It looks as if we're going to make a test of 30, but after that, we'll see how the message of the market plays out. The descending triangle, I don't know what the linear charts, if it's hitting or not, because I really don't use linear charts, but there's still a decent gap up towards the top part of this trend line. Now, as far as the 200-day moving average is concerned, I had one person say something about the 50 weekly average and all this type of jazz. Wake me up when it breaks that. I'm not going to wake you up when that's the case, because I don't use those moving averages. Plus, I use the front-weighted moving average. But I thought, you know, why not take a look at the 200-day moving average just for S and giggles? So I figure, how am I going to do this? I want to have 100 charts. I want to use the 18-period average, but I also want to have the 200-day moving average. Therefore, if I take a look at what 200 days is, and I figure there's about 23 trading hours in a day, so we'll multiply 200 times 23. And I do this in an 18 average, so I got to divide 4,600 by 18, which gives me a total of 255 and, well, 5/9. We'll say 256, which is a very even number. That's like 2 to the power of 9, I think. Let's do the 256-day chart to get an idea of what the front-weighted 200-day moving average looks like. So here we go. This is going to take us back to 2008. I think this is good to talk about trend line analysis in here just for a little bit. When you break a trend line, one of three things occur. One, you can have a reversal in trends. Now, of course, as of yet, this hasn't broken down support, so it hasn't broken the uptrend. Obviously, for that to be the case, that move I talk about down to at least 21.20 would be needed. As of yet, of course, that hasn't occurred. Two, you can get a failed breakdown and then usually a fast move after, but we're now on period number like 8 or something like that. That's really not that fast. Or three, you can just, the rate of ascent has still slowed down and you're just going to correct some more through time, which looks to be the case as of now within this trend. But also what's important too is how you look at this 18 average, which is really that 200-day moving average. For the first support level from the breakdown that took us down to 32 was holding for about 7 periods or so. And then it obviously broke down, which changed the direction of this 18 average. Not only was it a band of support, it became a band of resistance, but it established one low down towards here. So now you come up, you make a lower high, but you don't make a lower low. Okay. Then you come back again, you try to break above the band, failed breakout, still a higher high, and, well, another matching low. There's nothing on this chart stating simply just by looking at the chart that we're going to have a big move higher or big move lower. Nothing that states it. Now, of course, markets correct through time, so if anything, the charts say more so that it's going to go to the upside. And then, of course, fundamental analysis, well, that's pretty simple. Thank you for tuning in, and have yourself a magnificent day. Bye-bye.